All right, let's talk about buying a house. It's a huge step, and for a lot of people, the financing part can feel, well, impossible. Today, we're going to demystify two of the most powerful tools out there for homebuyers, FHA and VA loans. These government-backed programs can open doors you might have thought were locked for good. So, let's dive in and see how they work.
First things first, let's talk about the biggest roadblock. It's not about finding that perfect house with the big backyard. It's a number. One number that just seems to stop so many of us before we even get started.
You've heard it a million times, right? You need 20% down. So on a, say, $300,000 house, that's 60 grand in cash. Who just has that lying around? But here's the thing. That 20% rule, for a lot of people, it's pretty much a myth. And we're about to see exactly why.
And that really is the heart of the problem. It's not about wanting to own a home or finding one you love. It's about getting someone to give you the loan. This is exactly where the government decided to step in, to kind of build a bridge over that financial gap and make homeownership a real possibility for more people.
Okay, so let's jump into our first solution. This one is incredibly popular, especially if you're a first-time home buyer. We're talking about the FHA loan.
So here's the magic word for FHA loans: insure. The government isn't the one lending you the money. Instead, they're insuring the loan for the bank. Just think of it like this. Uncle Sam is tapping the bank on the shoulder and saying, hey, go ahead and lend them the money. If for some reason they can't pay it back, we've got you covered. And that little bit of security, it's what makes banks comfortable enough to approve loans for people who might have a smaller down payment.
And because of that, the benefits are pretty great. You can get into a home with as little as 3.5% down. The rules to qualify are way more relaxed. Plus, these loans are assumable, which is a fancy way of saying a future buyer could potentially just take over your loan, which is a huge deal if rates go up. But, there's always a trade-off, and that's that last point on the list. You have to have mortgage insurance. Let's dig into what that means.
This is basically how the whole FHA program pays for itself. It's called the Mortgage Insurance Premium, or MIP. You're essentially paying a fee in exchange for that low down payment and the easier approval process. And it's actually split into two different parts. First up, you've got this one-time upfront premium. It's 1.75% of your total loan amount. Now, the good news is you don't have to write a check for this. It just gets rolled into your mortgage, so you pay it off over time. Then there's the second part, which is an annual premium. Right now, it's about 0.85% of your loan amount for the year, but it's broken down into 12 chunks and simply added to your monthly mortgage payment. It's just an ongoing cost you got to factor into your budget.
Now, one more really cool thing about FHA loans is something called the 203K program. It's perfect if you're looking at a fixer-upper. Basically, you can find a house that needs some work, get estimates for the repairs, and then roll the cost of the renovation right into your main mortgage. So it's one loan, one closing, and one monthly payment for both the house and the brand new kitchen. Pretty neat.
Okay, let's switch gears. We're going to talk about our second solution now. This one isn't for everybody, but for those who qualify, it is an absolutely incredible benefit earned through service to our country. I'm talking about the VA loan. So notice the word is different here. Instead of an insurer, the Department of Veterans Affairs is a guarantor. What does that mean? Well, the VA is essentially telling the bank, we guarantee this loan for this veteran. It's like having the most trustworthy, rock-solid cosigner on the planet, and that little guarantee unlocks some truly mind-blowing perks. And here it is. This is the one that makes everyone's jaw drop. For almost all eligible veterans and service members, a VA loan requires $0 for a down payment. Nothing. Zilch. This is, hands down, the single biggest advantage of the entire program.
And as if zero down wasn't amazing enough, there's also no monthly mortgage insurance. Remember that MIP we were just talking about with FHA loans? With a VA loan, poof, it's gone. That alone can save you hundreds of bucks on your monthly payment.
So who gets to use this incredible benefit? Well, it's all based on your military service. It covers specific time periods all the way from World War II up to the present day. For those in the reserves or National Guard, you're typically eligible after 6 years. And of course, if you're currently on active duty, you're eligible too. Okay, so we've seen what each of these loans can do on their own. Now let's put them side by side and really see how they stack up.
When you see it like this, the differences are pretty stark. FHA is for just about anyone, while the VA loan is an exclusive benefit for those who've served. And then you see the big ones, a 3.5% down payment for FHA versus an absolute zero for VA. No monthly mortgage insurance for VA loans. The one thing to know about a VA loan is the funding fee, which is a one-time fee. It helps keep the program going for future vets, and most people just roll it right into their loan amount.
If you only remember one thing from all of this, let it be this right here. This is the simplest way to get it. The FHA insures loans to help make home ownership possible for the general public. The VA guarantees loans as a specific, earned thank you to those who have served our country.
So after all that, which one of these keys is going to be the one that unlocks the door to your new home? Well, it really just comes down to your own personal story.
So, which path makes sense? It's actually pretty simple. If you're buying your first home, you've got some savings, but not a huge amount. Or maybe your credit history has a few bumps. The FHA loan is a fantastic way to go. But if you are an eligible veteran or service member, the VA loan is almost always going to be the better choice. I mean, you just can't beat zero down and no monthly mortgage insurance.
Both of these programs, FHA and VA, have taken what feels like this huge, scary financial mountain and turned it into a totally climbable hill for millions of homeowners. You've got the info now, so the only real question left is, what's your next step? Thanks for joining me.